Hey guys. Right. So we're gonna start in 2 minutes, and just tell me where you're tuning in from, and we'll get started. Hi, Strongest Dragon 1. Where are you tuning in from? From Sacramento. Okay, let's get started. So today we're gonna be going over Tesla's Q3 earnings call report. I'm gonna be breaking it down into sections here, and it's probably gonna be a 30-minute video here today. Okay. So Tesla just posted record deliveries, record energy storage deployment, and rolled out its biggest software push. FSD 14 is live, and a light version is on its way for older hardware, or hardware 3. Tonight we'll dig into the numbers, the software, the robotaxi rollout, and what this means for the fleet, and how investors should think about 2026. Drop your questions in the chat. This is a live stream, and I'll try to go over them during the discussion, and mostly I'll save them for the last segment of this video. Let's go. So, we're gonna start with our headline results. So, our on-screen stack for Tesla, our revenue. So Tesla made a revenue of $28.1 billion, plus 12% for YOY, and which is a very big, a tremendous record for Tesla. They have our GAAP operating income as $1.6 billion, GAAP net income of $1.4 billion, and non-GAAP net income of $1.8 billion. Tesla's free cash flow is approximately estimated. We have estimated the numbers, and it is $4 billion, which is a new record. Cash and investments is $41.6 billion. That's a lot, plus $4.9 billion for our QOQ. So let me just go over what we went through in this again. So we went, our big numbers is $28.1 billion in revenue, up roughly 12% year over year. Operating income of $1.6 billion, net income of $1.4 billion, GAAP, and our non-GAAP is $1.8 billion. Free cash flow for about $4 billion, which is a record quarter. And cash plus investments rose to $41.6 billion. That's a strong liquidity position going into the next phase. However, margins remain under pressure, which we'll dig into later. The results set a base for their more aggressive software and autonomy push. All right, any questions for that? Any questions? Yeah, it's very impressive. It's a very huge amount that they have gotten revenue this year. But still, they're under pressure, as I just said, that they're under pressure for, their margins are under pressure, which we'll go into deeper. So, okay, no more questions. Let's go to the next segment, which is our deliveries, production, and energy highlights. So operationally, Tesla delivered about roughly 497,000 vehicles in quarter 3 2025, which is a tremendous record. Production was about 447,000 units. On the energy side, deployed a record of 12.5 GWh of storage. These are impressive volume numbers, especially given the macro headlines of Tesla. But it's important to remember that part of the delivery surge was driven by U.S. tax credit expiry, which may shift demand into quarter 4. So we'll talk about the sustainability of the momentum. The energy side, though, is clearly growing as a meaningful business for Tesla. So basically, more than the production units, 497,000 vehicles, which Tesla did not, of course, expect they were going to sell in quarter 3, which is a record. And energy, they're, of course, very impressive numbers, especially given our Tesla's macro headlines. And the surge was mostly driven by our U.S. tax credit expiry, which may be in demand in quarter 4 of 2025. Any questions? No questions. Okay. Go on to the next topic here, which is our margins and profitability. We're not going to go very in depth here, but I will talk about this, which is a bit of a deeper topic here. Okay, despite the high volumes, margins remain challenging. From the quarter 3 update, gross profit was about $5.05 billion and gross margin around 18%. Operating margin around 5.8%. Operating expenses are up, reflecting heavy R&D, AI or robotic investments, global cost pressures. The key takeaway here is Tesla is transitioning. So volume's up, but they're reinvesting heavily. And by heavily, I mean heavily. Free cash flow being strong cushions the margin pressure, but investors will watch margin improvement closely going forward. So our gross profit margin of $5.05 billion, with our gross margin is around 18%. Operating expenses are up. Key takeaway is Tesla's transitioning, and they're reinvesting heavily. Free cash flow cushions the margin pressure, but investors will keep watching our margin improvement closely going forward. Any questions before we move on? Any questions? So just remember, feel free to ask any questions. Anything? No? Alright, let's continue here then. Okay, this is a interesting and exciting topic for Hardware 3 Tesla owners here. FSD 14 Lite version for Hardware 3. We're going to give a deep dive into this topic since it is, of course, exciting. And it has a lot of details which we need to cover here. Right? So just anything, just going back, any questions here? Anyone has? No? Let's go. Next topic here. So, our FSD, okay. Now, the software story. This is where things get real interesting. Tesla revealed during the Q3 call and subsequent commentary, Full Self-Driving version 14, which is FSD 14, is already being rolled out to vehicles equipped with the newer hardware, which is hardware 4 greater, already. For the older hardware, for the older hardware platform named Hardware 3, which is often called A13, which is a chip in which they add the FSD parameters and constraints. Tesla confirmed that they will offer a FSD 14 Lite version. This was explicitly mentioned in the Q3 earnings recap, which quoted is, once the V14 release series is fully done, we are planning on working on V14 Lite for Hardware 3. Probably expected in Q2 of next year, which is Q2 of 2026. Now, what does this mean? Hardware 3 vehicle owners will not get the full FSD 14 experience, at least not immediately, because the hardware lacks some compute and memory capability of the newer chips. So, based on the hardware which Tesla Hardware 3 is running on, they have constraints and for the parameters, especially for hardware for FSD V14. But from an investor's perspective, the upgrade path means increased software revenue, extended service life for older hardware, and potentially improved customer loyalty. Key features being highlighted, and full FSD V14 for hardware 4 and beyond. Edge case handling, improved AI reasoning, more natural driving decisions, lane changes, object avoidance, debris optimization, and the sentience marketing. Now, this is a very unique word. Sentience. One minute. Yeah, so FSD V14, sentience, sentience is a word that people use to describe something. So I'm not gonna go in deep in that, but that's a good word to use. Okay. So in short, the software story is no longer sometime in the future. It's active right now, and Tesla is ensuring their large installed base, which is Hardware 3, isn't left behind. For investors, that's a meaningful lever for future recurring revenue and longer life cycles. So I'm just saying, Tesla said, quote unquote, Tesla Hardware 3 owners are our early adopters. That's what they said, Tesla said. Any questions before we go on? Any questions? No questions? Okay, let's get on to the next topic then. Our next topic is about our autonomy and robotaxi rollout. Now, so this all ties back to FSD V14 and the hardware transitions. The software upgrade path, fleet data, the robotaxi scale all feed to one another. Investors should watch the cadence of valid robotaxi miles, regulatory update, and software monetization as key inflection points. So, the robotaxi was launched in the Bay services launched in the Bay Area using their robotaxi technology. And our robotaxi technology or service was originally rolled out in Austin, Texas, but now they're planning to expand it to 8 to 10 U.S. major metros by year end, and aim to remove safety drivers in some zones soon, which means just in Austin, since that was where it originally they rolled out. So that's a short topic here because I don't want to go deep in that. Also, it'll take a lot of time. Any questions? Any questions? Any questions? No? Let's go into the next topic here then, guys. We don't have that much time, but we can get this through. Okay. Energy. So now we're going to talk about our energy business. Quick, but it's quick but important. The energy business was a strong performer this quarter, with 12.5 GWh deployed record. Tesla's energy/storage side is increasingly meaningful. The software/AI piece even ties in here with vehicle fleet data, energy grid integration. So while FSD grabs headlines, the energy side is a strong ballast for the business. Keep an eye on the margins and geographic expansion, especially outside the US, where tariffs and trade pressures remain. So that's that's quick, and we're not going to go deep into that. Any questions? Any questions? No? Good. Let's continue here. We have 2 segments left. 2 to 3. Okay, we're going to talk about Tesla's outlook and risk factors here. So, basically, we're going to go over post-credit US EV demand, pricing and mix, margin recovery, regulatory and autonomy risk, and hardware execution. So, let's talk about what to watch and what could go wrong. US demand may soften after the September 30th pull forward ahead of EV tax credit deadline. Tesla flagged this risk too. Next, pricing pressure. To maintain volume, they may lower ASPs or increase incentives, which weigh on margins. Number 3, margin recovery. As software and energy expand, margins should benefit, but execution risk is real. Number 4, autonomy and regulation. FSD unsupervised and robotaxi hinge on regulatory clearance and safety track record. A mishap could derail the narrative. And number 5, Harder 3 upgrade path. The rollout of FSD 14 Lite must perform and satisfy owners to maintain confidence and the excitement. So on the bottom line here, Tesla is investing aggressively. They built a cushion with the cash flow, but the next phase is about scaling profitability, software monetization, and non-auto growth. Any questions? Any questions? No questions? No questions here? Alright, then let's go to our next topic here. Now we're going to talk about what this means for investors, or the framework. So, for investors again, not financial advice, here's a framework I'm using. Number 1, volume and ASP. Can Tesla maintain or grow deliveries without sacrificing margin? Number 2, software attach and upgrades. FSD 14 Lite for hardware. 3, subscription take rates. Number 3, energy and services growth. Storage deployments, margin improvement, and recurring revenue. Number 4, autonomy/robotaxi milestones. Data on unsupervised miles, city rollouts, and regulatory wins. Number 5, last but not least, cash and reinvestment discipline. Will CAPEX and /R&D grow lead to scalable returns? If Tesla can check these boxes, the next leg of growth, which is 2026 and beyond, could be meaningful. The software slice in particular is becoming a differentiator. So these are just for investors, not financial advice. So this is just what my framework is. Any questions before we go into our live question and answer? Any questions? No? Okay, well, question and answers, just same thing. Any questions here? What do you want to ask about FSD 14 Lite, about robotaxi timing, energy margins? I'll take a few now, but if you're watching the replay, drop your questions in the comments and I'll respond in the next video. Any questions? This was a video. I thought it was going to be 30 minutes, but it's only 20 minutes. 20 minutes. So any questions, I can take any questions. Any questions you guys have? Anything? Nothing? Anything? No? Yeah. Well, subscribe for deep dives, of course. And coming next will be Q4 preview plus FSD V14 real world metrics. So if you found this helpful, hit like and subscribe. Next up, we'll build a Q4 preview, modeling post-tax credit US demand, energy margin scenarios, and how FSD V14 uptake could accelerate. Thanks for watching. Stay curious. I'll see you next time. Peace.